Hey, what's going on, everybody? Little Fish Investor here with another video. This is going to be our week 3 update when it comes to going over my portfolio, how the performance is going so far. Everybody knows that's been following me. I've been doing a lot of options play. I've also been dipping into some stocks. I did a little bit of rubber banding with the AMC. I'm going to be looking into trying to get 100 shares of AMC as fast as I can to see if we can take advantage of the option plays there. Maybe I'll show you guys a couple of plays that are possible right now if we were to get 100 shares of it as well too, or maybe we can at least get that collateral and do put options. So that might be a play. We'll look into it maybe during this episode, but basically just kind of want to go over the history of a couple of things that I bought throughout the week, and then how are the options going. We'll go over my total profit with these options as well too, so that way you guys can see the reality of how things can happen with options on, well, as long as you play it right, you play it smartly, you follow the system the way that it's supposed to go, because typically it's going to go right for you as well too. At least so far it's going right for me, and we'll dig into it as we get going. So we're going to go over here to pull up my portfolio. So we see that it's grown to the 6,700 right now, where if you check out my previous videos, you know, it was a low 6,000s on there as well. So my portfolio has just grown over this past week. And we're up $264 today, just because a lot of the stocks are green. So as we can see at the top right hand, these are the option plays that are going to be expiring. 2 of them are going to be expiring this week, and then we rolled out our option, and we'll dig into that here in a second for a further week. So we have this Synetics call right here at $3.50. Currently it's at $3.73. So the likelihood is currently right now that we'll go and open this up. So as we can see here, when we scroll down, the delta is at 74%. So this is a 74 chance against us. So we have basically a 25% chance right now that it is not going to, that it will expire below our 350 strike price. So the chances are highly in the favor of the person who took this call that I'm going to have to sell my Synetics shares at $3.50, giving on the date of 6/18, which, you know, I'm fine with. I'm not married to the stock or anything. If I were to have to sell my shares at $3.50, I'll collect the profit from where I bought at, which it wasn't too much higher. We can get into it real quick. My average cost is at $2.95. So if we were to break that down, we're going to collect, let's just say, this, 350, 295. So we'll collect the $55 profit, you know, for something I've had for, you know, 2 weeks. I also collected, you know, the premium on there, which we'll dig into, which was $33. So you're looking at $88 of total profit for a company I really don't know nothing about. We just follow the formula for the implied volatility on there, which I've done a video on. So if you guys want to understand all this stuff, you know, at the end of this video, I'm going to have a playlist for all strictly just stocks. And if you guys are interested in investing, you know, just, you know, follow those videos and tutorials. And if you guys like them, you know, invest, guys. You know, it's a great time to invest. You know, I'm glad I've stumbled upon these videos, that I was curious about it. I'm looking for new ways to make a passive income and work my way to that millionaire status. Long way off, but works towards my retirement, and keeps me in the mindset that I want to go with. So the Synetics play looks like I'm going to have to sell my shares because I will get assigned this if it goes above $3.50. So whatever, then I'll have that buying power, and then hopefully, I can put that into other stocks as well too, to get 100 shares, or maybe I'll just repurchase, Synetics or something like that. We'll have to see next week what I decide to do. So this Workhorse put that I have it at $13.50. So that means with the put, I agreed, somebody paid me a premium, and I said that if Workhorse were to hit the strike price of $3.50, I would buy 100 shares of that company. So I had to have the collateral up for it. So I'd be buying 100 shares at $13.50 of Workhorse. So all in all, what that would give me is like over 300 shares of Workhorse. And then I did the strategy so that way I don't care if I get a signed Workhorse at $13.50, because one, that's going to help my average price share of the total shares that I got, which is good for options, because then I would be able to, when I lower that, then when I do call options on it, then I would be able to sell it at a lower strike price than my average cost. Well, I wouldn't do that, but I would be able to, it would be lower than what it currently is at, so I collect a little bit more premium because I lowered that. So right now, it looks like it is going to be more of the favor where I'm not going to get assigned this, because it currently is at around 15.23. It's up 7% today. So we have basically 2 more days for it to go down to 13.50. If it doesn't hit that price, I still collect that premium that I've already collected it, but I keep that premium, and that contract expires worthless. I don't have to buy 100 shares on that, and then that collateral just gets released back into my buying power on there, and then I can just decide what to do, what I want at that point. And then our last one, what we did here, guys, was, remember, I did a call for 2 contracts, so I essentially did 2 calls, and our Workhorse play, we had it expiring on the 18th. And what I did, guys, was I was watching a video, and I was understanding when to close to buy. So what that means is that you are basically essentially giving back premium. So let's just say I collected, which we can see here, a credit of 232, and that was for 2 contracts. So it was like 117 a piece, guys. So basically what that means is that throughout the time of expiration, you basically can either get more of the money or more out of the money when it comes to playing with options in general. So as this option was coming to expiring, you are either going to be more favorable to you or towards the buyer. So I believe that strike price was around the $20 one, and it was nowhere near it, and it was so close to expiration that it was like a 73% chance favorable for me that this option was going to expire worthless, that I was going to keep that premium, keep my 200 shares. So what you can do in these cases, guys, and I'm going to be doing a video on this pretty much shortly once I come back from vacation, but what I end up doing was I did a buy to close, which you can see as an option right up here, and what I did was I paid a premium back because the premium that it was currently selling at was cheaper than what I did originally when I did the option. So essentially what I did was I collected that that difference on there, and so that way I can go ahead and close that position of the option, and I would keep the difference on that premium, which we'll look at what I absolutely got out of it when it's all said and done. And then what I did was, since I buy the close, I kept those 200 shares of Workhorse, and I did another option, and I just did it for a week out, and I did it for a lower strike price, but I still kept it above my average cost. and I collected the same amount of premium, which was $117 per contract, which I did two, which you can see right here was another $232 on there. So we'll actually look at that since that's all the option plays. So this is essentially the layout of all my option plays that I've done so far, guys. And I wanted to break this out, one, for me so I can keep track of it, and then two, to share with you guys that this is legit. I'm not hiding anything. These are all my all my plays, what I did, my total profit, and then I think I even have it on the calculator on here as well too, to show you exactly what I made so far. So our first one was that Synetic play, $3.50 was that strike price that I put for. I collected a $33 premium for writing that option, and my average cost is $2.95. So I basically had to do $295 to buy 100 shares of that company. And then their earnings date is August 9th. This is important, guys, because when options roll out, you want to make sure about the earnings date on there, because typically what ends up happening is that the stock will typically go up towards earnings dates, and then right after earnings it plummets. So then you can kind of calculate, hey, I want to do a call on this one, maybe I want to do a put after earnings date. It's kind of that mindset, like, hey, keep an eye out for this one to look at potential plays. And then also, you know, a lot of these stocks might have dividends on there, so you want to make sure close to that dividend date you're being safe on there, because those are stocks you're probably wanting to keep in your portfolio if you're a dividend investor, to collect those dividend payouts on there, to, you know, build growth and passive income into your portfolio. So if you're married to that stock on there and you're playing options with it, you want to be careful, because if you have to sell your option in your stock before that dividend date, you're not going to get paid that dividend. So you want to be careful when it comes to that one. So this option is not expired yet, because it's going to be closing here in 2 days, and then we'll see the income the outcome of that play through the next week. And then this is the recap. So we did our two call plays for Workhorse. Our strike price set was at $20. What we ended up doing was we did this buy to close at 70%, which that one was going to expire on Friday of this week, but it was at 70%, and we decided that it would be better to go ahead and take some of the profit, most of the profit on there, and then did a buy to close, so that way we can go ahead and roll it out for the next week, so we can collect a more premium. Our premium for that one was $117 each, and our average cost that we own Workhorse at currently is at $16.18. And then again, these are their earning dates. And what we did was we did a pay to close. So, or buy to close, that's what it is. I put paid to close because this is how much I paid to close those out, which $35 each, which was $70. And then, so what you end up doing was you end up subtracting, let's just say a total profit of 117 and 117, which was that 232, and then we end up, or 234, whichever one, and then we end up subtracting that by the 17 and 117, I'm sorry, by the 70, and then we end up getting our $82 a piece on there, or 162, whichever way you want to break it down. I did it by individual plays on there, so that way you guys can track it. Then we did our Workhorse put option, which you guys saw, which is at the 1350. It looks like it's going to expire worthless, so that's what I would put. I would put expired worthless on there. I keep that $60 premium on there, and then we'll just end up doing this total profit, and we're not going to be doing a pay to close at all. Actually, I can probably just go ahead and update this as well. So let me, I'm actually just going to do this right now. Boo, boo, boo. Keep that red. Sorry guys, bear with me. No, that's not what I wanted. Go ahead and keep our text green. There we go. All right, sorry guys. All right, and then so then we talked about that we rolled it out real quick. So we did our 2 workhorse call options, and we did it for a lower strike price this time, so we can collect a decent premium. So our strike price this time was at $18, and our expiration date is for next Friday. We'll see as going into next week. What we're going to do if we're more in the money, where we're at a 70% chance or more, we'll collect the premium of that one. We'll do a buy to close on that one. That's why in the buying power you can see I've actually kept some money, so that way I can have that money in the account to buy out that one, so we can re-roll our options again. And you can see this is still our average cost basis, the earning date, and that's currently where we're at. So all together, guys, this is what we're at total profit, and this is in essentially a week and a half. We're at $491 profit right now, which is actually pretty damn good. I'm really excited that this stuff is playing out. Wanted to show you guys as well too that this is a legitimate play. It is, it's risky because it depends on how you look at stocks options. I'm not married to any stock in particular except for the ones I'm going to start doing dividend plays on. But I'm not sure I'm going to do option plays on them. We'll have to see as I grow up, grow this account up, and then we might look into doing that one. But I mean, like these stocks I'm playing with right now, it's all about that high implied volatility. We'll probably be looking at AMC. I would love to try to see if I can get AMC on option plays, which I'll show you actually right now, guys. So we'll go over here to AMC, which everybody knows the big swing is going on if you're in the stock market. But look at this right now. If you were to do AMC options right now, and let's just say you bought, AMC. So let's just say you bought right now 100 shares at this current share price. It would be $53.46. So you'd be paying, $5,341 to be able to buy 100 shares of this company. Now you can immediately turn that around, and then right now with 2 days left, you can, let's just say you feel comfortable collecting the profit between $53 and $60 on there, which is a good return. Then you'd be able to collect a premium of $259, guys, with 2 days left to go. Now, you just have to feel comfortable selling at $60. It keeps going, guys. It keeps going. You can make $100 at a $75 strike price, feeling comfortable, which is a lot of profit of a difference on there. And you still collect $100 within 2 days. To me, that's easy money. I don't see it going to $75 in 2 days. But you never know. It's that implied volatility. You just got to make sure that you're not married to the stock, that you feel comfortable at selling at $75 on there, and you still collect $100 on that premium on there. Let's look at next week, guys. The closer you are to the share price, of course, the more premium. But look, guys, even if you feel comfortable at selling it at $60, let's just say that, $730 premium right into your buying power right away on there. And then, keep doing this, guys. Keep doing this until the strike price, the squeeze is over. Who knows what is going to happen to it. Definitely keep an eye on it. Do your DD when it comes to it. But this is something that I'm going to be trying to get to if I can manage it. Because these are sweet premiums. Great way to build up your portfolio pretty quick to start investing into dividends and stuff like that, because you want to diversify. You don't want to strictly just be options. You also buy rubber bands. You also want to buy dividends. You also want to buy just stocks that are going to grow growth over time for you no matter what. So that was the dividends play, guys. Options plays. And then my main dividend that I only have right now is AT&T. They pay one of the best dividends out there right now. Currently about 5 more shares today, so sitting at 25. I would love to get that to 100, so if I decide to do option plays with it, and just keep investing into this company on there, because they'll just keep paying me out. You can see their dividend yield is 7.13, and the amount currently I would get paid with having 25 shares is $12.75. If I were to have 100 guys, I would get paid $51 per time they do a dividend payout on there, which is, you know, pretty nice. That's just $50 that they're just paying me for having shares of their company. And then if I decide to do option plays on them as well too, I just get paid more premium on there. And do your due diligence when it comes to doing that. But it's not a high implied volatility, so you don't see massive swings on there, so you're not going to get high premium, but it's just extra money. It's all about building passive income and, you know, not being married to any stocks or anything like that. So a couple other things, guys. I'm not going to pull it up, but we'll let you know that I believe I have either $100 or $200 still on my ETF for Vanguard for my retirement. That's where I have that money on there. And then I will let you know that I am pretty much still about the I would say I'm about 70-30 when it comes to being invested into the stock market, and I only have 30% of my total income in cash right now. So that's going to be it for this video, guys. Hope that you guys liked it. Hope you guys are, you know, seeing how these plays work out. If it's something that you guys are interested in doing and starting to get invested, as always, I will never try to sell you a course or anything like that. I'm 100% transparent on everything I do, but I will drop a link in the description below. It will be a referral link to Robinhood if that's a platform that you guys want to use. Really user friendly as well too. And if you have any questions or anything like that, you guys can always ask me and I'll help you out the best I can. But using that link below helps both of us out. We'll both get free stocks by using that link on there, which, you know, after 3 trading days you guys can just sell that stock if you guys want to and invest in a stock that you guys want to on there. So if you guys like this video, please smash that like button. It really helps the channel out, helps that with the YouTube algorithm. And then as always, guys, if you guys want to see more videos on this, just smash that subscribe button and hit that notification bell so you know anytime that I post a video. That's it for this video, guys, and I'll see you in the next one.